Welcome to our video series, Master Mutual Funds, a beginner's guide video series. In the first episode, we learned what mutual funds are and why they're a great investment option. In this video, we'll break down the different types of mutual funds, so you can choose the one that best fits your goals. Let's dive in. Mutual funds can be broadly categorized based on where they invest your money. Let's look at the major types. 1. Equity funds. These invest in stocks, making them a high-risk, high-reward option. They're great for long-term wealth creation and ideal for those who can handle market ups and downs. 2. Debt funds. These invest in fixed income securities like bonds, making them a safer option compared to equity funds. They're suitable for those who want stable and predictable returns. 3. Hybrid funds. These combine the best of both worlds, investing in a mix of equity and debt. They balance risk and return, making them ideal for moderate risk investors. 4. Index funds. These passively track a stock market index like the Nifty 50 or Sensex. They're cost-effective and a great choice for beginners. 5. Sector funds. These invest in specific sectors like technology, healthcare, or banking. While they can offer high returns, they're riskier since performance depends on the sector's growth. 6. LSS, Equity-Linked Savings Scheme. These are tax-saving funds that come with a 3-year lock-in period. You can claim up to 1.5 lakh rupees under Section 80C of the Income Tax Act. The choice of mutual fund depends on your financial goals, risk tolerance, and investment horizon. For instance, if you're saving for retirement, equity funds or hybrid funds may be a good option. For short-term goals like buying a car, debt funds can be more suitable. Now that you know the different types of mutual funds, you're one step closer to building your investment portfolio. In the next episode, we'll talk about how to get started with mutual fund investments. Don't forget to subscribe to Stock Glimpse India for more insights.